Hey, Scott, thanks for the call. I got your message. Thanks for the questions about qualifying for a mortgage today at today's stress test rate and the risks of waiting out this market as rates increase and what that means for affordability. So I've decided to share this whiteboard here. I'm going to try to use this whiteboard with some of the numbers I've come up with to talk about affordability and what that looks like for your clients. So if we use a stress test rate for today, the standard stress test rate that most people are aware of is 5.25%. Okay. Now, 5.25 is at this current time is only working for variable rate mortgages. The reason is it has to be either the higher of the contract rate or 2%. The higher of either the stress test rate or 2% above the contract rate being if we're talking about fixed rate mortgages. So this is the stress test rate. And the current 5-year fixed mortgage for under 20% down is 4.19%, around there. So let's say 4.19%. So if we use the 4.19%, actually, you know what? We're going to start with just the, we're just going to start with the stress test rate on a variable or on a high ratio mortgage. If you use a average household income of around $120,000, so either one homeowner making 120 or more, or two people combined making 120, I'm just using 120, and of course all of these numbers matter depending on household debts, income, all of these things come into play, but we're just going to speak generically. If you have a household income of 120,000 with 0 monthly debts, I'm going to use the average home price. I'm going to use the average, property taxes, if we're talking about Guelph, greater Guelph area, of around $5,000 a month, or a year for property taxes. If I use the stress test rate, the affordability on $120,000 of household income is currently around about 567. Okay, so using the current stress test rate, 567 is the maximum affordability. What does that look like for a payment? You're in and around $3,000 a month for a mortgage payment. We could talk all day about whether that's obviously the variable is going to be much lower than that, but I was just using the 4.19% as a number. So you're looking at about $3,000 on current high ratio mortgage rates. So now if we take that 4.19, can I select this? Oh, look at that fancy stuff. We're learning, Scotty, we're learning. So if I take the stress test rate at its current 5.25%, and we increase it to 6.5%, which is what you would need to qualify for today on a conventional mortgage of 20% or more down. So you're going to be using a 6.5% stress test rate, because that 6.5% is 2% above the 4.5% rate. So let's say 4.50% for greater than 20% down. Okay, and these are all on 25-year amortizations. That affordability, you're based on 120,000 a year, your affordability drops to 505,107. Okay, and that on that 4.5% rate on that affordability amount, you're looking at a payment of $2,795. And I was typing away and it didn't even show up there. That is amazing. All right, let's try that again. 2,795. Okay, so your payment drops slightly, but your affordability drops a lot, right? Now, if we increase this stress test rate to 7.5%, so that would be about 1% higher than what rates are making us qualify for today. Again, 2% above the contract rate. So if today's rates are 4.5%, 4.5, but they go up another percent by the end of the year, that means that stress test rate under current rules would go up another percent, right? So if the contract rate's 5.5, we got to qualify at 7.5. $120,000 a year household income, 0 debts, $5,000 a year on property taxes as a ballpark. At 7.5% stress test, your affordability drops down to 462, 485. And the payment on that 5.5% rate, 5.5% contract rate, the payment's going to be $2,822. So the question that we all have to ask, your buyers and sellers that have to be asking themselves at this time is, if I wait out this rate market and don't get a pre-approval rate hold, and lock in a rate hold for me over the next 4 months, because you can get a rate hold. I mean, you can get some rate holds 6 months, 12 months, right? But let's talk in real life terms, the next 120 days or 4 months. If you get that rate held today for 4.5 or 4.2%, depending on your down payment, and if you're going CMHC or not CMHC, there's a bunch of different variables there. You could be waiting too long and your affordability drops about 100,000 if you go from current stress test at 5.25 to maybe a future stress test rate of 7.5%. You're dropping about $100,000 from up here down to here, and your affordability drops. And Scott, you and I both know, even though the frenzy on most houses right now isn't happening, there's not 20 offers or 30 offers like we saw 5-6 months ago. Generally speaking, it's still a seller's market, which means, generally speaking, there's not a lot of flexibility in the sale price, right? If it's priced right, and you and Jess can probably attest to this, if it's priced right and it's the right home for a lot of people, that is going to go for asking or potentially even over if there's a bunch of offers. So I guess to answer your question from your message on what it looks like if people wait versus if they get pre-approved today and actively get out there and keep searching, is your affordability as rates go up is going to diminish. But we all know that values of good quality homes, especially in this area, aren't falling as fast as the affordability would be falling with these stress tests rates increasing. So again, this is educational purposes only. If you share this video with your clients and your database, that's totally fine. And it is case by case. It depends on your monthly debts. It depends on how much your current mortgage balance is. It depends on if your current mortgage is portable. It depends on how much you can prepay in those balances. There's a lot of ifs. So Scott, I'll, in this email that I'm going to send you with this video, I'll drop my calendar link for any of your clients that want to book a 15-minute call with me. I'll put that link in there, and they can book a 15-minute call with me or a Zoom call, free of charge, obviously, and talk to a mortgage broker who can maybe answer some of their questions, if it's a right move, if it's a wrong move, and yeah, just here to help. So I thought I'd shoot this quick video. I hope this all worked with sharing my screen, and I hope I can get this downloaded and sent to you. So anyway, say hi to Jess for me, and we will talk to you soon. Bye-bye.